Well, it's American Express, Scott, and this is a name that had a really great month. I mean, it really outperformed the rest of the financials, but it also started to stretch in terms of comparisons of where its valuation has been in the past to where it is now. It had actually stretched up towards 20 on the PE, and it was normally it's right around 12, 12 and a half, something closer to that for global payments. We all understand what's going on, obviously, in the global scheme of things right now, so this name might be under a little bit of pressure. It's already pulled back a little. But we've got a pretty substantial buyer today in here of 10,000 of the April 160 puts. Now, stock's trading well above that level, but they're looking for a little bit more of a pullback than we've already gotten off of the high. So I think that's something that makes a lot of sense to me as well. It got in front of itself. Maybe it gets a pretty decent pullback. It doesn't have to get all the way down there, but if it starts pressing to the downside, these options ought to move in a hurry. And they're a little bit over $3. They actually bought it as a put spread, Scott. They were buying the 160, selling the 150 puts. So basically a $10 spread that they were paying just a little over $1 for that spread. So it makes sense from a risk-reward perspective for me as well.
What do you make, Pete, of the overall activity in the banks? As I look right now, thanks to Gina Francola and our markets desk, the KBE and the KRE are now on pace for their worst day since November 21st of 2021.
Yeah, well, it's understandable, and we know which banks have that much more exposure to what's going on, obviously, globally, it's particularly talking about Russia. And when you look at J.P. Morgan and you see the reaction of that stock over time, it makes some sense. By the way, this is a name that, for a long time we've talked about price to book and what that really means. And from another, again, from a valuation perspective, Scott, this was a stock that was well over 2 times book. So versus something like a Bank of America that had been trading at about 1 times book. So if you're just looking at that and forget the Russia part of this piece, you can understand. If you put up a chart of Bank of America versus J.P. Morgan over the last year, you'll see exactly what I'm talking about. The outperformance of Bank of America versus J.P. Morgan is very, very clear, and I think it's because J.P. Morgan had reached these levels where it had been when it got up and above that 160. Now it's actually pulled back significantly, and at some point it probably becomes a buy. But I think that right now you're going into murky water if you're looking at J.P. Morgan right now, because we're just finding out more and more about exactly what all the sanctions and what might be happening from a banking perspective in Russia, and so that's clearly going to be something that's going to play out over time as well.
Yeah, as real time as it gets. Pete, I appreciate it. Thanks so much for calling in. That's Pete Najarian.